Assalamualaikum and hi. Today, me and my friend will present about case study 2, which is BesiCo 9 Berhad. Okay, let's get started.
Hi, Assalamualaikum. My name is Nurin Sofiyah. So I will start discuss on question number 1, which is referred to Appendix 1. So Appendix 1 is about audit queries from the company's auditor. So the management are required to reply all the audit queries given by them. So first audit query is about going concern. So before we go further, let me explain to you what is actually going concern. So going concern is every entity is assumed to be a going concern unless there are factors present to negate the assumption. So there are several factors to negate the assumption. For the first one is series of losses over the prior years, loan defaults, credit denial by suppliers who now demand prepayment before delivery, contractual obligations that are now unprofitable, and the last one is litigation that may bankrupt the company. So next, let's focus on what auditor addressed about issue on going concern in BesiCo. So the first one is current liabilities of BesiCo exceeded its current asset. Second, BesiCo has defaulted on some borrowing obligation. Third, Giant Steel plant had temporarily ceased its operation, and the last one is majority of the employees were retrenched. Okay, I will present on the first issue and the second issue. So for the first issue is about current liabilities of BesiCo exceeded current asset. It showed that BesiCo is insolvent, and that means the current asset owned by BesiCo are insufficient to cover the current liabilities. So to cover the current liabilities, BesiCo plan to attract new investors to inject capital for the company. And this plan is important to make BesiCo sustain in the industry. The net working capital should be positive. So for having enough working capital, ensure that BesiCo can fully cover short-term liabilities. Okay, the next issue is BesiCo has default on some borrowing obligation. This is where BesiCo plan to do debt restructuring. So debt restructuring is process used by a company facing cash flow problems or financial distress to avoid risk of defaults. The main goal for debt restructuring is for making the debt more manageable. The debtor, which is BesiCo, and the creditor, which is the suppliers of BesiCo, agree on the amount that borrower can pay back. This process can be win-win situation for both entities, as BesiCo plan to avoid bankruptcy and the creditor receive more than they would through a bankruptcy proceeding. So BesiCo will negotiate to the creditor whether they choose to reducing the interest rates on loans or borrowing, or by extending the payment terms.
Next is cessation the operations of Giant Steel. By discontinuing the operations and liquidate all the assets in Giant Steel, BesiCo will have more money in order to sustain in the industry for next 2 or 3 years. As a result, BesiCo will have more current assets and it will result positive performance of the company. Hence, the company will be listed in Bursa Saham. And lastly, retrenchment majority of employees. BesiCo decided to maintain some of its employees in the company who are competent and transfer them in other divisions. This is because these employees are valuable to the company as they can generate more profit. However, it seems a loss for the company if these skillful, experienced and knowledgeable employees are fired. Regarding to retrench a majority of the employees, BesiCo decided to give them a compensation after had a town session with these affected employees.
Assalamualaikum and hi. My name is Mastura Binti Fadzil and I will explain about audit queries in deferred tax assets. In IAS 12 state that the amount of the profit tax recoverable in future period in respect of two aspects, which is first, deductible temporary differences is recognized if it's probable that temporary differences will reverse in foreseeable future and taxable profit will be available against which temporary differences will be utilized. Next, carry forward of unused tax losses and unused tax credit. It's recognized if and only if it is considered probable that there will be sufficient future taxable profit against which the loss or credit carry forward can be utilized. So, we have related to the BesiCo case. The BesiCo should de-recognize the deferred tax asset because BesiCo has suffered losses for the past few years and there is no indicator that BesiCo has profit to be utilized. IAS 12 state that deferred tax assets should be recognized if there will be sufficient future taxable profit against which the loss of credit carry forward can be utilized. So, in conclusion, BesiCo record its deferred tax asset in the statement of financial position because BesiCo believes that regulation plan will enable them to generate sufficient profit in the future. Otherwise, if BesiCo did not record the deferred tax asset, it will increase the tax expense and deteriorate the financial performance that will result in undermine the investor confidence to BesiCo. Thank you. We move on to the next slide.
Hi everyone, my name is Nurafiqah Syazwani Binti Suhaimi and I will explain about the impairment of PPE. So IAS 36 explains about the impairment of assets. BesiCo must ensure that their assets are not carried more than their recoverable amount. The recoverable amount will be the higher of fair value less cost of disposal and value in use. The impairment test need to be done to seek for the indication of impairment on their PPE. BesiCo may determine the amount of impairment losses from PPE when the recoverable amount of that asset is lower than its carrying amount. Then the differences between carrying amount and recoverable amount will be recognized in BesiCo's income statement as impairment loss.
Now I will plan on inventories. The issue is BesiCo record the inventories at cost basis. There is no testing for the lower of cost and net realizable value. BesiCo decide to record inventories at cost basis because they want to prevent for any increases on expenses and losses due to the writing down of NRV. For the recommendation, based on IAS 2, BesiCo should do testing for the lower of the cost and NRV. The cost should include all costs of purchase, cost of conversion, and other costs incurred in bringing the inventories to the location. NRV is the estimated selling price in the ordinary cost of business, less estimated cost of completion and the estimated cost to make the sale. Any written down of NRV will be recognized as an expenses and any reversal of NRV will be recognized in the income statement as income. In the future, BesiCo should do the testing for the lower of cost and NRV in order to record the inventories in the statements.
Hello everyone, I am Adawiyah Zahurah. Alright, so let's continue with the last audit queries from BesiCo's auditors. Basically, they have emailed BesiCo stating that they found out although the giant steel plant has ceased operations, there is no provision for onerous contract has been made in relation to the offtake agreement. Alright, before replying to the queries, we should know that this issue applies IAS 37, provision, contingent liabilities, and contingent assets. Okay, now, what does onerous contract means? IAS 37 defines an onerous contract as a contract in which the unavoidable cost of meeting the obligations under the contract exceed the economic benefits expected to be received under it. A contract can be onerous from its outset, or it can become onerous when circumstances change and expected cost increases or expected economic benefit decrease. So how do companies treat onerous contract? As soon as a contract is assessed to be onerous, A company employing IAS 37 records a provision in its financial statement for the loss it expects to make on the contract. There is no provision for onerous contract of Giant Steel because it doesn't meet the criteria of onerous contract under IAS 37. This is because the unavoidable cost of meeting the obligation does not exceed the economic benefit expected to be received from the contract. Alright, next. Question 2 requires us to prepare financial statement analysis for the Managing Director of BesiCo, indicating the financial performance, financial position and also financial ratio analysis. For my part, I will discuss regarding the first requirement, which is analysis of the statement of profit or loss. For your information, I use horizontal analysis where the base year is 2015. So this is the statement of profit or loss or SOPL of BesiCo for 2015 and 2016. As we can see, BesiCo records loss from operations of 336,151 in 2015 while 308,312 in 2016. Then, from this statement of profit or loss, we can see there is net loss of 656,594 in 2015 while for 2016 amounting 560,781. So, from the previous SOPL, we have made an analysis on revenue and found out that there is significant decline in the revenue of BesiCo amounting Rm 1,385,729, where revenue in 2015 is 2,087,508 while 7,01779 in 2016. The factors that contribute to the decreasing percentage of 66.83% are due to temporary shutdown of Giant Steel and also depressed steel price because of dumping activities by Chinese steelmakers. Next, we also made an analysis for raw material and consumable use. We found out that the amount of raw material and consumable use has declined steeply from 1472066 in 2015 to 372382 in 2016. From the variance of 10996x4 or 74.70%, we conclude that the contributors to this decline is because Giant Steel's production has dropped in 2015 and 2016 compared to 1.32 million tons production in 2011. For employee benefit expense, the amount has dropped from 91960 in 2015 to 76285 in 2016. This results in variance of 15702 or 17.07%. Contributing factors that associated with this drop is the retrenchment and termination of Giant Steel's workers since the company has to suspend their operations. Lastly, we can conclude that loss from operations shows a slight decrease of 27839 or 8.28% from 336151 in 2015 to 308312 in 2016. Decrease in expense of raw material and consumable use and employee benefit has contributed to this drop.
Next question is financial statement analysis on financial position of BesiCo. So this is the statement of financial position of BesiCo for the year ended 2015 and 2016. So we focus on current asset, which is property development cost. Which the amount of property development cost is increased from 26,727 in 2015 to 46,749 in 2016. The variance of 20,022 or 74.91% show the increasing due to the project under property division currently at the completion phase. Any cost incurred during this phase will be capitalized in property development cost under current asset. So for the next one is inventory, where the amount of inventories in 2015 is 290,210, while in 2016 is 129,649. The variance of 160,591 or 27.2% show the declining in inventories due to cease operation in Giant Steel. This is because there is no production in the Giant Steel. Okay, for the last one for current asset is cash and bank balance, where the cash and bank balance is decreased from 118,792 in 2015 to 74,810 in 2016. The variance between 2 years is 43,982 or 37.02%, show the cash outflow incurred in BesiCo for 2016. BesiCo might incur cash outflow within the period, whether in cash flow from operation, investing or financing. Okay, next for total equity. So the total equity amount to 1,063,992 in 2015, while in 2016 is 1,630,677. The variance is 566,685 or 53.26%. The declining in total equity is due to the loss contribution from the steel, furniture and other segment. So for non-current liabilities, there are loans and borrowing, where loans and borrowing increased from 278,626 in 2015 to 281,674 in 2016. Next is under current liabilities for loans and borrowing. In 2015 is 898,800, while in 2016 is 949,997 in 2016. So the variance in non-current liabilities and current liabilities are 3,048 or 1.09% and 51,197 or 5.7% respectively. It shows the increasing amount due to current assets of BesiCo are not enough to cover the liabilities in BesiCo.
Okay, for this slide, I will explain about financial statement analysis, which is financial ratio. Okay, first is liquidity ratio. This financial ratio that measure a company ability to repay both short-term and long-term liability. First is current ratio. This ratio measure how many times the firm can cover current liabilities. As we can see, in 2015, the firm can cover for its current liability for 0.21 times, while in 2016, the firm only can cover for 0.11 times. Next is acid test ratio. This ratio measures how the company pay off short-term liability with quick assets. So this ratio is declining from year of 2016. So the liquidity is not good compared to 2015. Next is efficiency ratio. This ratio measures how well a company is utilizing its assets and resources. First is inventory turnover ratio. This inventory measures how quickly inventory is sold and restocked. So, as you can see in 2015, they completely sell and replace stock by 5.85 times compared to 2016, which is 4.67 times per year. Next is asset turnover ratio. This ratio measures the value of company by using its asset to generate its revenue. So, as we can see in 2015, the company can generate revenue using asset with 0.65 times compared to 2016, which is 0.25 times per year. Next is profitable ratio. This ratio measures a company's ability to generate income relative to revenue, balance sheet asset, operating costs, and also equity. The first one is gross profit margin. This ratio shows the profit of the company after paying its cost of goods sold. So, profit margin decreased because of tremendous decline of sales revenue, but the company still managed to pay the cost of goods sold for these 2 years. Next is return on asset ratio. This ratio provides how much profit a company is able to generate for its asset. So, as we can see, the ratio for 2015 is more efficiently compared to 2016 in managing its balance sheet to generate the profit. Last one is leverage ratio. This ratio measures the amount of capital that comes from debts. In other words, to evaluate a company debt level. The first one is debt ratio. And this ratio measures how much total asset that finance using the debt. So the ratio in 2016 is increased compared to 2015 due to increasing in property development costs as the company used more debt to finance its assets. Next is debt to equity ratio. This ratio measures how much the total equity that company finance using the debt. So, in the table above, the ratio in 2016 decreased compared to 2015 because the company used shareholder equity to increase the paid-up capital rather than using the debt. Okay, we move on to the next slide.
Now I will explain the issue on retrenchment and layoff arrangement for the workers. The issue is BesiCo gives short notice to the employees that have immediate effect. Second, BesiCo does not set out specific criteria in selecting the employees to be retrenched. Third, BesiCo has paid half of the employees' monthly salaries since January, and lastly, BesiCo does not report the retrenchment to the relevant authorities. The recommendation for this issue is, first, BesiCo should set out specific criteria. BesiCo should set out a list of specific criteria in selecting the employees to be retrenched, such as consider their age, their length of employment, and the employee's family situation. Second, provide proper notice. BesiCo should provide notice to the employee based on length of employment. For example, an employee that has worked less than 2 years, then the length of notice will be not less than 4 weeks, so they will have some time to find a new job. Third, report to the relevant authorities. BesiCo will need to fill in a form that requires it to provide information including the reason of retrenchment, the number of workers to be retrenched, the benefit payable to the workers, and the date of retrenchment. Lastly, provide benefits. BesiCo should consider to provide benefits or compensation to the employees based on their length of employment, such as employees that has worked more than 5 years, he qualified to get 20 days of wage for each year of his employment. Then, in conclusion, BesiCo is also suggested to do town hall session with the employees, where employees can have their right to voice out their opinions in their opinions about the company's problems. From the view of human resource management, BesiCo can achieve ethical division if the company provide all the arrangement as BesiCo treated the employees fairly and respect the employees' right. That's
For question 4, we agree that the consulting firm should be proposing the restructuring plan to the Board of Directors and Managing Director of BesiCo. Steel segment of BesiCo, which is Giant Steel, is the biggest contributor to the losses since 2016. The reasons are there is rising in the cost of material, inconsistency in the steel products quality, and dumping of cheap imported steel products from foreign steelmakers. Since Giant Steel has no new orders since 2016, we plan to do the restructuring plan in BesiCo operations. So, the consulting firm should be proposing this restructuring plan. Firstly, they may apply the existing strategy where they dispose their investment in Giant Steel by closing the steel segment. This strategy helps BesiCo to limit their losses. By discontinuing the steel division, BesiCo may focus all the resources in the remaining segments. The next restructuring plan is to increase the production in the furniture division. This can reduce the cost per unit of their furnitures. BesiCo may compete with their competitors by reducing their selling price of the products. The third restructuring plan is to transfer the employees that is being retrenched from Giant Steel to the remaining segments. Second is to compensate the employees that exceed the capacity. BesiCo may avoid from being sued if they come with the better plan for all workers in the steel segment that is being retrenched.
From the above of restructuring plan that is proposed to both the Board of Directors and the Managing Director of BesiCo, we can conclude that restructuring plan is the best approach for BesiCo in order to survive in the industry. This is because, first, BesiCo can gain more profit by focusing profitable divisions. BesiCo is suggested to discontinue the operation of Giant Steel as this segment resulted to loss. This will give benefit to the BesiCo as they can reduce their costs by narrowing operations and focus more on property and furniture divisions as these segments are profitable than Giant Steel. Second, BesiCo can consider to increase the production of furniture division, which can reduce cost per unit. This plan makes BesiCo becomes more competitive with China's steel furniture in the market. Furthermore, if BesiCo focusing more in furniture division and provide high quality of material, it will give value to the customers. Hence, production line will become more efficiently, increasing profit and maximize shareholders' wealth. Lastly, transfer some of competent employees from Giant Steel to other divisions. By transferring them who are skillful, experienced and having more knowledge from Giant Steel to other divisions, BesiCo will gain more profit and achieve the objective. This is because the production will become more efficiently and save costs as BesiCo doesn't have to hire new employees. However, retrenched employees will be given a compensation as BesiCo can reduce its expenses by paying one-time costs rather than incur monthly expenses, which is employees' salary. That's all from us. Thank you.